Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the corporate world's sometimes wild dance. Today we're diving into LyondellBasell's latest report, and folks, let's just say things are getting interesting with some big financial shifts happening. Stick around to see what it all means. And hey, if you love getting the real story behind these filings, make sure you are subscribed. We also have a Discord community linked in the description below where we break down even more. Come join the conversation. LyondellBasell Industries NV is a global independent chemical company. Think of them as a major player in making the building blocks for plastics and chemicals we use every day. Their business is all about turning raw materials like oil and natural gas into the stuff that makes our modern lives possible. Unfortunately for them, and thankfully for us, sometimes when the industry goes through ups and downs, it really shows up in their financial reports. They've got a lot of different segments covering everything from basic olefins and polyolefins to more specialized advanced polymer solutions, and even technology licensing. Looking at the numbers from late 2025, the company's total sales were around $30 billion. That is a pretty big number, but here is the kicker: it is down about 10% from the year before. So why such a drop? Well, it seems like lower prices on many of their products played a big role, making up about an 8% decrease in revenue. On top of that, they also saw a 4% drop in sales volumes, mostly because customers were buying less. It looks like global trade issues, falling oil prices, and more supply in the market all ganged up against them. Now, on the cost side of things, which means how much it cost them to make their products, they did see some good news. Their cost of sales went down by about 4% compared to the previous year. This is mainly because the price of the raw materials they use, like natural gas and energy, became cheaper. This is a bit of a silver lining in a year that was otherwise tough. This is where things get really interesting and a little concerning. The company had to take a massive hit with goodwill impairments totaling almost $1 billion. What does that mean? Basically, they had to write down the value of something they bought in the past because it is now worth a lot less than they thought. When they talk about European petrochemical and global automotive industries facing a downturn, this is the consequence. They also took other impairments on their property, plant, and equipment, an additional $279 million. This all adds up to a significant revaluation impact on their assets. When you put all these numbers together, including those huge impairment charges, it is no surprise that the company reported an operating loss of $420 million. This is a sharp contrast to the nearly $2 billion in operating income they had in the previous year. That is a major swing and points to a very challenging business environment for LyondellBasell in 2025. And when you look at the bottom line, the net loss for 2025 was around $738 million. A year earlier, they had a net income of over $1.3 billion. This is a dramatic shift and highlights the financial pressures the company is facing. Let's look at how their different business parts are doing. In the Americas, where they make olefins and polyolefins, their EBITDA, which is a measure of profitability before certain expenses, was $1.1 billion. That sounds good, but it is less than half of what they made in the prior year. The main reason for this drop was lower margins in their polyethylene business, which is a major product for them. They also saw lower results in their olefins business. Now, for their European, Asian, and international operations, things are much tougher. Their EBITDA in this segment was a loss of $457 million. This segment saw the bulk of those big goodwill impairments we talked about. Polymer margins also weakened a lot because of competition from imported products. It really shows how different global markets can affect a company. Their Advanced Polymer Solutions segment also reported a significant EBITDA loss of $651 million. This is heavily impacted by those impairment charges they had to take, while they are trying to improve performance through restructuring the automotive industry, which is a big customer for them, is clearly struggling. On the cash flow front, they brought in $2.2 billion from their operations. That is good, but it is down significantly from the $3.8 billion they generated in the previous year. They've also been cutting down on their inventory, which is a positive sign of managing cash better in tough times. They spent almost $1.9 billion on capital expenditures, which means investing in their facilities and future growth. A good chunk of that was for essential maintenance and safety projects. They talked about delaying some growth projects to preserve cash, which is a smart move when the economic outlook is uncertain. Shareholders did receive dividends totaling over $1.7 billion. For investors who rely on income from dividends, that is good news. However, they also significantly reduced their quarterly dividend in early 2026, which tells us they are prioritizing financial stability. Looking at their debt, they owe quite a bit over $12.7 billion. They have been issuing new notes to manage their debt, which seems to be a strategy to refinance and extend their debt maturities. While they have access to revolving credit facilities, they are currently not borrowing against them, which is a good sign of liquidity. Now, for my take on all of this, LyondellBasell is in a tough spot. The chemical industry is deeply cyclical and they are feeling the impact of global economic pressures and overcapacity. Their strategy to focus on core businesses and build out their circular and low carbon solutions is sound for the long term. However, the near term is challenging with significant impairment charges and reduced profitability. They are prioritizing cash flow and managing their debt, which is prudent. The risks they face are many, from raw material costs and geopolitical instability to environmental regulations and the increasing demand for sustainable products. Their success will depend on navigating these complex markets effectively and executing their strategic initiatives. The reduction in dividend is a clear signal that management is focused on navigating the current downturn and preserving financial strength. The company has a strong foundation with its technology and market positions, but the road ahead will require careful management and a keen eye on global economic trends. So what do you think about LyondellBasell's numbers and their future? Do you see a turnaround on the horizon or more challenges ahead? Let us know your thoughts in the comments below. And if this breakdown was helpful, please hit that like button and subscribe for more corporate deep dives. Don't forget to check out our Discord community linked in the description for more discussions and analysis. Thanks for watching, and we'll see you next time on Corporate Decoder.